to Chicago, Future of Finance. I'm Oliver Rennick. It's 2026. Markets starting off very peacefully and pretty stubbornly bullish. Bears missed their window, it seems, for a brief moment in Q4. The S&P 500 is trying to crack 7,000 right now. And we're also seeing volatility sub 15. We're seeing crypto trying to stay firm. A little bit of strength in MicroStrategy. Big story has been about metals, gold and silver. Small breather today. The charts and the numbers look pretty good. The economic data came in pretty smoothly. ISM services above expectations. The charts on the macro stuff look fairly range bound. I'm going to give you a quick rundown through what I see as the major macro themes here, and then we've got Brent Kochuba standing by as we get cracking today. First of all, here's the chart of the S&P 500. What is there not to like? Up and to the right, higher highs. Even with a little small red candle today, we're sitting here on a 17.5% gain over the past year. That's really good stuff. Just below 7,000, a big round hole number. We approach it maybe with some baby steps, but we are unmistakably stepping in that direction. Also want to point out that volatility just remains very much muted. A slight climb from below 14. I think that also was in our playbook as well. One thing we did talk about was the potential for stocks to creep higher and for volatility to creep higher as well, just given how subdued VIX was around that big year-end expiry. Now, a few changes in the way I'm viewing some things in terms of my overall risk radar. Here's what it looked like when I left you. This was green on stocks, red on Bitcoin, yellow bonds, yellow dollar, and green gold. Green gold, of course, just being the most stalwart, reliable trade up and to the right. That's why it's been like that for a while. Gold has just looked very strong, remains that way, continues to be a chart that even with some volatility has now led into a silver move, and copper as well, which was also a big one. So everything looks pretty clear in terms of the outlook for the metals. Despite that big move that we had, they have remained pretty consistently strong. To look at the chart for gold for a moment there, gold is just really up and to the right despite a red candle. Silver, of course, was also a beast. What's interesting too is that copper's joining the party. We did talk about Freeport-McMoRan last week with Hans Albrecht, who put that on the radar. Copper pulling back a little bit, but important to note that it also did put in fresh all-time highs. So it's just really hard to find anything to not like in the market right now. That's kind of the main point, is that generally speaking, things seem very strong. I'm looking also at the potential for the Bitcoin trade to firm up a little bit. BTC looking pretty decent. Not a great chart, but at least it's range bound at this point, as Bitcoin generally has held on for the ride. It hasn't been great, but it also hasn't been terrible. So we'll call it range bound there for BTC. I think that obviously could have gone worse, but right now it does look like a Bitcoin can hold the range at least. So I think that's pretty encouraging. I think I'm real close to putting the yellow light onto Bitcoin. Maybe another day in this range, and I think that you look for potentially risk on as a whole to seem like it's going to generally firm up across the board. So coiners, be on the lookout. The green there, I think by the end of the show, maybe I'll update it during the commercial break as long as Bitcoin doesn't break down. But the chart has been holding, and it could have gone worse. MicroStrategy also seems to have firmed just a tiny bit, but still very much a chart that demands a lot of improvement. So I'm looking for risk on to start extending back into crypto this week. That's another thing that's on my radar as well. I do have Mr. Brent Kochuba joining me on the Skype to get things kicked off here. The CEO of SpotGamma. Brent, how you doing, sir?
I'm doing great. How are you doing, Oliver? Good to be back with you.
Hey, it looks like markets are pretty primed here. It looks like we've got good momentum. It also doesn't look too complicated from my read. What say you?
Up and to the right, as you said, is certainly the way that we're working. There is some positive gamma in markets, and that is helping to kind of hold us up over 6,900. We've seen a nice rotation. I think the rotation is the kind of key thing to flag here. You have stocks like the memory stocks are really moving up. You have a lot of these sleepier names, stuff like Home Depot and housing, healthcare, that kind of stuff seems to be moving higher. If you look at a chart of like XLV, defense stocks are busting out. So there's a lot of this non-Mag 7 stuff that is starting to really move higher. And with that, we have S&P at all-time highs. What's interesting is short-dated implied vols are coming down. They're right around 10%, which is pretty low. And they're pretty low even though we have a couple of events coming up that people are flagging. We have NFP, which seems to be holding some event vol on Friday, and then we have CPI next week. But overall, as you say, there's really no reason to at least want to short stocks here. Things seem to be making new highs under this rotation. And if I have one thing that I'm going to flag that is a big problem, it is correlations. Okay. Correlations, and we have this metric that we watch closely here called Core 1M. What it's showing us is that single stock calls are starting to get over their skis a little bit, and that is in relation to the S&P index vols. Now, this indicator in particular, it's a Cboe metric. When it hits the 8 level, generally things break, and they generally break in the kind of... Brent? I'm sorry, say that again, Oliver?
Can I chart it somewhere?
Yeah, you should be able to pull it up on Thinkorswim. If you have TradingView, you can bring it up on there as well, or the Cboe website.
The ticker?
COR1M.
COR1M. Nice.
Yes, sir.
Got it. Yeah, okay. So it looks like it's been trending down and to the right a little bit?
Yeah, that's exactly right. And historically, if you look at this and if you zoom back in time, if you see when this metric goes particularly below 8, and 8 is just kind of a line I've drawn on this chart in the past. When you get down and around this area, what this is flagging to you is that the single stock implied vols are quite elevated relative to index vols. Now, the kind of preeminent or the first time you really flagged that this was a major issue was July of 2024. It broke the lows that we saw in this metric going back to 2017. That led back to, if you remember when Jensen Huang of NVIDIA fame was signing women's tops and things like that. That's how crazy the period have gotten. And that led to about a 10% S&P drawdown the next month. We then saw similar times in very recent memory here where that Core 1M also broke down to similar lows. The most famous of which in recent memory was on October 10th when Trump put out a tweet on a very quiet Friday afternoon and the S&P dropped 3% like a stone. So there are these multiple times here over the past, call it, year where this metric has gotten very low and it seems very basic, but what it's showing you is, hey, single stock now vols are getting really rich relative to index vols, and that's just a sign of overbought. It doesn't mean that we have to put in an all-time high, but what it tells us is that, look, maybe some contraction here, some consolidation, some removal of some froth is necessary. Now, what's interesting about this, again, though, is that the stuff that's getting bid right now is stuff like the memory stocks. If you look at like a Micron, for example, that stuff is getting really bid up, where NVIDIA, Apple, that stuff seems to be a little bit cooler. So what's interesting to me about this too is, okay, this is a sign of things maybe getting a little rich. Maybe we need some consolidation. And then what this is lining up with is OPEX next week, right? We have OPEX on the 16th. And so this could be this time where I would love to see a little bit of a contraction, some consolidation, some cooling off of these implied vols in the on calls and single stocks, and then maybe that will kind of rebase us and allow us to kind of plot a new path ahead. The other thing with OPEX here is next week on the 16th, then you got an FOMC, right? 80% odds that we don't change rates into this FOMC at the end of the month, but obviously that's going to be something a lot of people are watching. The other thing here is that another source of strength for markets is like the metals, XLB, XME, copper you just showed going crazy, right? So those single stocks or stocks related to those complexes are really going crazy, right? And I'm not here to say the top is in on these things, but they're all very overbought. You look at, we've been talking about silver ad nauseum here, but, throw copper onto that, uranium, all these other names. This stuff is all just very bid at the moment. And, kind of a cooling off, I think, would make some sense as we look forward.
On your top gamma notional, but I'm not seeing a lot of the other metal-centric stuff. So I don't know, maybe the top's not in until the options crew starts dominating it. Or is this just an exception today because we're off a little bit, Brent? Have they been ranking among big tech? Have they joined the party for heavy options flows?
Yeah, you could see SLV right there on the left, the
do
top
see SLV there.
options volume today. Yeah, and
and I see
what's
it
funny
here,
too is the Bitcoin stuff had disappeared, right? Nobody was talking Bitcoin, and then all of a sudden the year ends, and now some of these Bitcoin names are getting a little bit of a bid, right? So you had mentioned a little bit of rotation into that. I don't know, part of me wonders the Venezuela thing, right? Is there some type of a relationship there with some of this stuff as well, right? Where there is this uncertainty trade tied to metals and tied to Bitcoin where maybe this stuff was about to cool off, and then you get this odd geopolitical event which kind of stokes the flames of, hey, I need to rush into the Bitcoin gold silver trade, which does kind of go with a little bit of this geopolitical intrigue, I guess I would say. So, there seemed to be a little bit of resurgence with that. Now, that happened obviously with the start of the new year, so maybe there's just more of a kind of a rotation that's normal end-of-year rotation as well. But, there clearly is, like, this stuff from the options landscape is very rich. It's very hard to buy calls in, say, SLV and have a good expectation of that paying off. Now, you look at the same thing with, like, Microns or the SanDisks of the world, right, where we had the NVIDIA event today, and that's putting a bid into all these memory stocks. Well, these memory stock implied vols now are getting pretty rich, right? So, I think if you're a bull in these names, you would love to see a little bit of a concentration or consolidation rather, and a little bit of a pullback. And I think when we go back to that core 1M metric, that's telling us that these single stock implied vols are just rich, right? And that it's time for a little bit of consolidation and a little bit of a repricing there.
Multiple different ways, different angles to look at volatility, because I do think that just one of the main themes we talked about around the holiday, the expiry, it's so important to think about the timeline for options. It's what makes them what they are, is the time element, and so we have to respect that. And one of the things we were looking for as a result of that was kind of stocks up and staying firm while vol drifts higher. So we got a little bit of that, Brent, because it just seems like we can't keep VIX under 14 forever, 15 forever. Can we? Or I don't know. Can we?
1 month realized vol in the S&P is 1 month realized vol in the S&P is trading at around 9 right now, 8 to 9. Historically, you can add 3 points to that, and you come up with a fair value for the VIX, right? And that's a very finger in the air metric. But that gives you, okay, VIX around 12, 13 should be reasonable, but we're not there. We just came off this holiday period where you could look at VVIX, for example, had absolutely died on the vine. Other metrics of S&P implied volatility were at real lows here. But to the point that you were making, there is a little bit of a stock up, vol up positioning here. And remember, the VIX measures 1 month options, right? 1 month S&P options. So I think what that's starting to pick up is the post FOMC period. I don't know how much uncertainty is going to be priced in around the forward guidance of, say, FOMC and some of these other things. But there is absolutely, a bunch more macro data coming up over the next week, which could change some of those expectations, I think, a little bit. And so, I think what we're seeing is some re-hedging with the market at all-time high. The fact that VIX is getting, a little bit of a bid there, despite the S&P at all-time high, does tell us that there is a little bit of hedging flow popping out. Now, ultimately, what I think we see is people going to keep selling that really short-dated vol, particularly before FOMC, so the 0 to kind of 5 days to expiration. But, there is a little bit of a VIX elevation there, right? Skew is getting a little bit of a bid. And I think ultimately what the signal here is, as long as they're above 6,900, they're going to keep selling those short-dated options. Single stocks are getting a little bit too rich in terms of their bid relative to the S&P. But as long as they're above 6,900, you got to go with the flow, and you got to think about grinding higher. Under 6,900, I think, is where things start to get breaky. And I say breaky because that's kind of like crashy, and you could see these single stocks unwind, and then you could get a little bit of a volatility spasm, kind of like what we were seeing in October or November.
I'm looking at your hero chart right now, as well as just SpotGamma in general. So if there's a good way to visualize kind of where those levels are that we should be kind of minding. I do always like to just kind of start from your overview where you've got some big bold colors on here, and it seems like the options activity above 70.35, I guess maybe if we go beyond 7,000 a little bit.
Right. Yeah, what you're looking at there are the futures equivalent. And so what that's showing you is essentially there's some call sellers of the non-zero DT variety, which is a bit unique, coming in around 69.85 and 7,000. And those are people that are selling calls with a view that the S&P is going to have some kind of a fight there, right? And I think that's going to be a major resistance level into OPEX next week. I don't think that level goes down cleanly without a fight, barring some big catalyst, and I don't know that there's a big clear catalyst here over the next 1 to 2 weeks. So that level seems to be an area where I think we're going to have some time to kind of try to consolidate or grind through that level. I don't think that's a level that gets broken through easily. So you can see that as a kind of a pinning resistance level, but what we're seeing underneath is a deterioration or a soft underbelly to this market. Now, I don't know that the market's going to take the opportunity to kind of break down through that 6,900 level, but if it does, then I'm going to be looking for a much bigger move down, right? And so, that's the thing I think we need to watch here, that, hey, call sellers coming in is a vote that the market's not necessarily going to blow through that new high, right? But that's different from put buying. If you get put buying, then that starts to move vol higher. That adds a negative gamma below, and you start to see the chance for kind of a volatility type spasm where markets drop pretty quickly. So we're not in this environment yet, but the call selling adds to resistance above. If you break 6,900, that's where puts start to jump, VIX starts to jump. That's volatility pushing to the downside. And then that core 1M, again, I flag back to that because what that is saying is there's a lot of room here for those single stock vols to come down and index vols to move up. And that has historically correlated with big jumps in, say, the VIX, right? So we are sort of, dancing, I think, on the brink of a correction here. And people really need to be aware of that.
They rise the most. And generally, stocks go up together, but correlations spike in sell-offs when people just start dumping.
Yeah, because in this environment, what are people doing? They're saying, look, Mag 7s was all I wanted to own before, but now the memory stocks. Memory stocks are the hottest thing ever, right? Let's go pile into that. Let's go pile into silver stocks. Let's go pile into MicroStrategy. Right? You're generally feeling, or investors are feeling very comfortable about equities right now, right? It's about which equity do I need to own to outperform the market, as opposed to the idea of do I own equities at all, or do I need to own bonds, for example, right? So it's not about asset allocation here. It's about which stock do I own, because everyone's quite bulled up on the equity front. And so those,
the MAG's chart is sideways, People, I think, it looks distinctly slower than the index.
Right, and if you look at the Dow's all-time highs. People are talking about the equal-weighted S&P, RSP is that index. Charlie Miguel, getting his note, was mentioning that this morning. So you can see these kind of new vectors of attack. Again, the equity rotation. People feel very comfortable about owning equities here, and they start to express that as saying, owning the index is not enough. I need to find out, SanDisk or Micron or what name I can possibly squeeze out a little more alpha from. And so, that is oftentimes where I think traders will get their hands slapped, because you have to respect the fact that, risk remains. There is the opportunity for downside in markets sometimes. And when you bid calls up to too rich of a value, then people want to start to come in and sell those calls, right? And so those are the things that you have to start to flag in some of these names, again, that are getting a little bit rich, like a Micron.
I like that, blasting off a little X post as you're talking there, quoting you, because I think it's pretty good. Do we think metals will correlate with broader rotation? New vectors of attack. I like that, Brent, for the bulls. It could be fun to see RSP, et cetera, others ramping up, get a little taste of something different. That's kind of why I'm thinking about switching that risk radar to something a little bit more favorable for Bitcoin if cryptos finally start firming up. And I like that you brought up Master, which has had a solid couple of recovery days. Always unique eyes on the market, Brent. Thank you very much. Love the volatility analysis too, of course. Thank you very much, sir. CEO at Spot. 2-minute break. Then we're going to come back. Mr. Jon Najarian standing by. We're going to talk a little bit about the economic data that came out this morning. ISM looked pretty good. ADP also improved. But what's the deal with the poly market story saying that the Venezuelan nab of Maduro doesn't count as an invasion? We'll be right back.
increased volatility, investors are bracing for large market moves, both up and down. Will the market rebound 30%, or will we see a 30% drop? At the end of the day, uncertainty remains a constant. Innovator's floor ETFs are designed for volatile markets. They aim to position portfolios for market moves regardless of direction or magnitude. They are intended as a core equity solution, providing exposure to U.S. equities with built-in downside protection, seeking to deliver more than 70% of the upside and targeting a max loss of 8 to 12% annually. With specified levels of sought-after protection and upside participation, we believe the floor ETFs offer an evergreen strategy designed to allow investors to remain invested regardless of the market's direction.
Welcome back to Chicago Future of Finance. I'm Oliver Rennick. We got stocks pulling back a little bit there. We did see a dip as we were talking about some of the strength in the non-MAGs companies and a little taste of strength in crypto and other places. But the gamblers took a tough one this weekend. If you were on Polymarket looking for an invasion, John, apparently us nabbing Mr. Jon Najarian, us nabbing Maduro didn't count. How are you, John?
Doing well, my friend. How are you doing?
I'm doing great. Had a nice little holiday break, got a little peace and quiet, a little Yuletide momentum carrying us in. Brent and I were just talking. I mean, the market looks unstoppable.
Yeah, overall, we're getting a lot of what will help drive the market to new highs as it has. One of those things, obviously, was even though it's down the line, getting basically the Venezuelan oil back online and not having it all go to China, or some of it go to Iran and some of it go to China in exchange for, I know Iran has a lot, but they have some refined product that they're pretty desperate for. So there was a trade going on there. And these are all sanctioned countries. Iran, Venezuela, Russia, China have various types of sanctions for what can be shipped. And they were skirting these rules. China now has been deprived of up to 7% of their demand for fuel right now, for crude oil. That's not anything about natural gas and so forth. So, Oliver, I would think, and I've said this since basically the threat of the invasion popped up, and that is if China doesn't have enough reserves of crude oil, they can't go to war. So people are focused in on the idea that, oh, this is just about Trump wants cheap oil. And yes, he does. Or he wants to get Maduro out because he's threatened Trump's life. And that's probably true as well. We know what happened when somebody threatened George Bush Sr.'s life. But I think what we're looking at here is the real possibility that China, if they don't go right now, will not be able to go in on any kind of a sustained military action in Taiwan. Why? Because as you draw down their basically their equivalent of a petroleum reserve, which used to be around 90 days, it's going to keep dropping and get into the 70 days, 60 days, 50 days sort of thing without this crude oil. That's a real problem for them, Oliver. And because then they have to decide, do we really want Taiwan this badly so that we'll basically hurt the rest of the population and our manufacturing base, or do we have to step back? So again, it's a little bit of 4D chess by the president.
I've been watching Landman, John. Great show. I think it's Tyler Sheridan's best based on the first 6 episodes I've seen. Billy Bob Thornton crushes it, and it's literally like a case study in like the oil, not really price bullish necessarily, because they talk about how they like to keep it in a certain range, right? The kind of like mid 70 kind of sweet spot. But what I've kind of taken away the last few years from all the geopolitical things that have gone on, from trying to figure out Russia to Ukraine, to trying to figure out Israel and Gaza, to now this. The bottom line, this line on crude just goes down, John. And I feel like, to your point, like, look, the point, Landman, is there's a lot of dependency still on this commodity, but the way it's changed so much to be a U.S. controlled asset is just extraordinary. And it feels like that's led to prices going lower overall, which is, I think, something generally good for most of us.
Yeah, and it's going to cut the price of goods that we buy at stores because that last mile is almost exclusively through gasoline-powered vehicles, diesel-powered vehicles. Certainly, there are some like Amazon that have electric vehicles fleets, but that's not the rule. That's rather the exception. And I think overall, we're going to see prices down on virtually all of the commodities that Americans buy. You're going to see gasoline prices at the pump. But again, and you've stressed this already, and you're absolutely right. This doesn't happen like that. This requires significant spend in Venezuela. We will find people with risk capital like Chevron, who has stayed there throughout all of this turmoil. We'll find others that will go in as long as they think the president has their back and won't just walk away. That I think you're going to see the prices continue to come down. That's bad for Russia and that's bad for Iran because they're both so dependent on crude oil. And for that matter, Venezuela back in the 50s, 60s, 70s, they were the golden child of Latin and South America. But then they got too dependent on crude oil. You know who learned a great lesson from that? Saudi Arabia and the UAE. And that's why they're trying everything in their power to expand.
Exactly.
Yep. And they've done a little bit of that, but we're talking about, and again, this is on a landman, or actually this is on a different one. This is on Jack Ryan, where he talks about the idea that you've got rare earth elements, REEs. You've got more gold than South Africa. You've got 400 million tons of silver. These are all known deposits in Venezuela. Yeah. So this isn't just a crude oil play. It's not just cheap gasoline.
How it destroys potential, right? Just massive.
Yeah, and if you nationalize something and you steal somebody's not just intellectual capital like IP, like China has done.
Decades of offense, basically, of running what could be a really resource-rich and contributive world force into something so isolated. John, we talk a lot about the event contract stuff and the risks of event contracts and the opportunities associated with event contracts. And one of the things that I thought really hit home for me on the story was about Polymarket and the definition of how they described an invasion. Super interesting. I think does kind of set the stage for a lot of what's going to have to be ironed out in this asset class and this market going forward, because I could kind of see it in both ways, to be honest. In my mind, if something is ever typed in the rule book anywhere before you trade something, you've got to be aware of it. Okay, you've got to be aware of it. You've got to know the rules of the game if you're gonna play for every single bet. But still, it really tells us that you've got to read the fine print on this stuff.
Yeah, that's absolutely true. And you're right about some of these guys. Obviously, Polymarket is the biggest by far, bigger than Kalshi, bigger than the next 12 competitors. And there are literally almost 100 of these prediction exchanges when you really go deep. But how have they defined, just like, for instance, the Bitcoin exchanges around the world? What sort of protections did they have in place for cyber attacks and all the rest? Well, we found out pretty quickly that some of those weren't very safe at all. Same thing with Polymarket, Kalshi, and these others is how much have they defined these bets? Is it an invasion or is it just an abduction? Is it only an invasion if we send a whole, bunch of troops?
These things are important because you come in my house and you take my kid, I'm going to say you're an invader. It might be an abduction. You take me or you take my cat, still an abduction and an invasion. But, hey, that's why when if you open a brokerage account to trade anything, there's a billion things you got to read. Now, a lot of people are just going to scroll, click. But you got to be aware, because then suddenly you'll get a call on a margin or something that you didn't realize, or an option you didn't realize was going to expire, whatever it may be. It's just a lesson you here to learn no matter what asset class you're trading. Don't get sit down at the slot machine if you don't know how to play, which is, by the way, why I don't play slots, because I feel like they're the most complicated thing out there.
Yeah, And you play a much more fun game that requires a little bit of this gray matter rather than just sitting there. I
Yeah.
can't believe that back in the old days when they had the slot tournaments and you had to pull it, you don't even have to pull the one-armed bandit anymore. They just hit the button and they think it's a quote tournament. It's the craziest thing. God bless them for being able to draw people into those things, but yeah, that's not my cup of tea either.
I try to steer my way, but yeah, even like you sit down in a poker game, make sure you know what the rake is. What are they taking? Because every casino and different games are different. So it's just, to my mind, it's part of the game, and it's a little bit of a warning. Let's talk about something a little bit more easy to figure out, John. Data from today, ISM services looks fine to me. Above 50, this is the important part of the economy. Bonds tried to push through 4.2 again on the 10-year, but they're not doing it. So to me, that looks like Goldilocks.
Yeah, we're going to be hearing more and more about Goldilocks. We're going to be hearing about how good news is bad and bad news is good. The market loves to do that. But the headline PMI today coming in at 54.5 roughly. And basically employment returning to expansion for the first time since May of last year. I mean, prices paid, all of this data was in a relative way good. And so people used it as an excuse in some cases to take money off the table. But when you look at some of the really outperforming assets today, when you look at things that have moved pretty dramatically, you're looking at something like a SanDisk, for instance, over the past couple days. I mean, SanDisk and Western Digital, you said it about memory. Yeah, it's all about memory right now until it isn't. But SanDisk moved 28% yesterday and today, hitting an all-time high today. Western Dig, 17%. They both, of course, benefit from AI, but they are not per se AI stocks, but they're the bricks and mortar. They're the picks and shovels of what you need to have AI work effectively.
Yep.
So like them both. Yep. And then you saw Intel today, and Intel was getting a lot of love and traded up to, I think, $44 today from 37, just
pulled back,
less than a week
45.
ago. Yep. So, there's a lot
there.
going on.
Intel chart looking great.
And by the way, I'm not happy that you don't have you and I, out in Vegas for CES. Because if we were out there, Oliver, then you and I could be playing some poker too tonight.
We could. And whatever else they got at CES. They always got crazy stuff. We might be doing it inside of a self-driving Tesla truck or something. The opportunities are limitless.
Yep. Well, next year we'll have to get...
John, you think Intel's out of the woods?
Do I think Intel's out of the woods? Yes.
Yeah.
I mean, the government's stake in Intel, that was the first sign that, boy, you don't want to fade that. When the president does a deal and says, I'm going to provide all this money, but I'm not just going to be dumb and write you guys a check. I want a stake for providing this for you guys to expand your fab, your semiconductors and so forth. And he got it. And now look at what they're doing. Intel's spending money, getting back into gaming in a big way.
They need
That's
a little
why
bridge
CES, always do from time to time.
Yeah, I was about to say, I've spoken, I'm the entrepreneur. Bridge me up, baby.
Yeah, absolutely. They needed it. They got it. Exactly. And when you look at how cheap Intel was for such a long time, and when the president decided that he needed to get in there, I think it was, very telling, very worthwhile that the president said, you know what, Intel is a national security issue. So if we're going to put money in here to make sure these guys stay and at least dedicate the money we're giving them to factories in the United States and so forth, that's fantastic. It's great news for workers and tech, and it's obviously good for national security.
I love to see that it looks like it's working. I've got one thought on that I never really said much about this. It was kind of like while we were just getting back on air, when I was just coming back on the TV in August, so it wasn't really at the top of my agenda on things to talk about at the time. Mm-hmm. But I will say there's kind of a comment I always wanted to make on that, which I never did, which is, believe me, I'm doing my show down here because I'm a card-carrying capitalist. But I also look at history and realize that it's not useful to kind of think about things in such skewed kind of bilateral black and white things, right? Like bailouts; those were socialist in some ways. Some people are, what people are arguing is, okay, this is an administration rescuing a company, blah blah blah. Since when do we not do that? The problem is when you have to have some degree of flexibility in your worldview on what the government's job is supposed to be, and when very much integral companies that put this country where it is, Intel being a formative one of .com, and to see that maybe there was just a bridge loan sort of needed, I think is a very small infraction in the American history of bailouts. So, and now the chart tells you that it was worth it. So far, it looks like we're making, going in the right direction.
Well, how about this? The former administration pledged 20 some odd billion dollars to increasing chip production in the United States. The president, sitting president, President Trump, put about $9 billion at $20.
Yep.
$20.47 into Intel. Intel today, as you say, almost hit 45. So number one, great return for us, Mr. President. Number two, again, national security issue, because do we really want a Chinese chip going in the F-35, the F-22s, or any of our other defense-related stocks? No, we don't. We know they've tried to put spyware and other things on these chips. The last thing we want is for a whole bunch of Chinese chips, for that matter, a bunch of Chinese steel and so forth.
That too, I think. It's almost a defense move, right? To make sure that you don't lose one of your stalwart companies. So I've never hated it. I think you have to have flexibility in whatever sort of political corporate view you have. So chart looks good.
Agreed.
Any other trades that you're big on right now, John? Obviously, we spent time talking silver, Micron, a few others. Are those moves expired at this point, or they got more?
Well, Micron has made just such an extraordinary move. It's up over $100 in the last month. I mean, it has moved. I think we had it at unusual activity at 240 or something like that. And, it was in the 340s today and yesterday. So I'd say, give it a rest, take some profits, write some calls against that. I like Regenesil Bioscience, that's RGC, but we've talked about this one a lot. It's for hyperactivity disorder, ADHD. They're up 46% today. Yep. We've got the JP Morgan Healthcare Conference coming. That's going to put more focus on stocks like this. And I'd say also, we've had a resurgence in
might be losing you,
believe
John.
it or not, a cheap
there
stock.
There you go.
It's under $7, and somebody today bought 28,000